Did you know that 38% of Americans cannot tell you what makes up a credit score? While 90% of Americans either knows that there are a credit score or they know that, something is calculated to give you a credit score, but actually, like, how does it work? So, my name is Tanya, and welcome to my channel, Essential Facts. I have been in the banking industry just a little over 25 years. And I can tell you that I have come across a lot in the industry over the years. Now, what is my expertise in the credit industry or just the banking industry? Credit cards, um, mortgages. Now, I will not say that I know everything about mortgages because that industry is changing as we speak now. There's always something's changing with that industry. But nonetheless, we'll get into that, on down the road. But it's credit cards, it's mortgages. I've had dealings with checking, like deposit accounts, checking, savings, CDs, or what we call certificates of deposits. Also, I've actually sold cars like way back in the day, many moons ago. We can dab into that as well. And I've also worked with unsecured loans, collections, things of that sort. So, things that make up your credit, things that people are concerned with, things people just really don't know about. So, people ask me a lot of times, like, can I get this off my credit report? Um, can I buy a house, or what do I need to do to buy a house? I don't think I can afford a house. 9 times out of 10, if you're affording rent, you can afford a house. But again, we'll go into that, on down the road. Now, I will tell you that there are a lot that goes along with just the banking industry in of itself. And like I said, those are the items that I want to focus on because those are the items that I know about. So I just want to make sure I don't forget some of these items here that I am just want to mention to you basically. So like I said, people, ask me, how do I get my credit? What is a good credit score? Should I get a home equity line or a home equity loan? Does it make sense? What should I look for in things like a home equity line, a home equity loan? Even with credit cards, what should I look for? Why was my credit line reduced? How long will the delinquency last on my credit report? Um, is there anything I can do to get it off? And just it's just a lot. And people are always just tell me, you need to like just share this information because you've done so many different aspects of the industry. Now, I will tell you, I don't deal with stocks, bonds, cryptocurrency, bitcoins, or any of that because I just don't know enough about to speak professionally about those items. So I stay in my lane. I talk about what I know about and what I've experienced and what I've worked with. So let's talk about one term. Let's just jump into something here really quick. So we all know that you make your payments on your credit card, and that drives, a good credit score if your payments are made on time. So it's not just the payments that drives your credit score. You can have a credit score that's, let's say, 710, 715. That could possibly be at maybe 750, 760. But the reason why it isn't is because your utilization is high on your credit report. So you're saying, what is utilization? Utilization is the total amount of credit you have out there versus the amount you used. And I'm not going to say it's just all the credit because there is a caveat to that. And that caveat is they're not looking necessarily at your secure debt. So you have secure debt and then you have unsecured debt on your credit report in most cases. So your secure debt for things like your mortgage, your car loan, if you have an unsecured loan that are structured where it's set payments over a set period of time. So debt like that, secure debt, um, well, let me back up here. The unsecured debt can be, again, a personal loan that you have out that's not backed up with collateral. So let me just clarify that. It's not backed up with collateral. That's why it's called an unsecured debt or unsecured loan. What you have backed up with collateral is basically anything that can be taken from you if you don't pay it. If it falls into delinquency, like a home or a car, a boat, just, your tangible items. So those are your secured debt. Now, your unsecured debt, let's say you have your unsecured loan, you get your fixed payment over a fixed period of time. A lot of times it's usually a fixed interest rate. And then you have your unsecured revolving debt. That's for things like your credit cards. That's unsecured revolving debt. That weighs a lot on your credit report, believe it or not. It really does. Now, the reason why it weighs a lot on your credit report is because it is unsecured. Creditors want to know, can you handle, credit? And they want to know, can you handle credit that has no collateral behind it? Because in actuality, the bank is taking a loss should that debt charge off, the unsecured debt charge off. If it charges off, then the bank is taking a loss. Now, are they taking a 100% loss? No, because they made some money off of interest on you. But, in the end, it's going to hurt you more than it's going to hurt the bank, really, because it's going to end up on your credit report that you didn't pay your debt. And now you have, you know, that delinquency on your credit report. And contrary to what you hear some of these people out here saying that you could just get it removed, by doing X, Y, Z, that is not how it works. Because if it were that way, then having your credit reporting agencies like Experian, Equifax, and TransUnion, it's all moved. So, be careful of what you hear people say out here saying that they just got their credit removed, I mean, their bad debt removed from their credit report like this, like that. No, that's not. It's just not true. There's other things involved, how that can be done. I'll just put it that way. We can get to that another time. So back to the utilization portion of it. So if you are utilizing more than 30% uh of your revolving debt, it just doesn't look good. And if it's unsecured debt, it doesn't look good. Now, you can have a credit score that still looks decent. Yeah, you can. Yeah, you can. But it does make a difference in the amount of credit that you will be extended in the future. So you can have a credit card that you may have received 10 years ago that has a $25,000 credit line on it. And let's say your total amount of, let's see, revolving debt and unsecured debt on your credit report is showing, let's say, $40,000. So it's showing $40,000. That $40,000 um, total amount of credit, you have that $25,000 limit from that credit card that you had from 10 years ago that you're still using. You're making the payments on time and you haven't been late. But let's say the balance on that credit card is $20,000. It'd be $15,000 out of $25,000. Guess what? that utilization is much too high. On that credit card alone, if you, and I want to do the math here just really quick, you have a, let's say, like I say, a $25,000 credit line on that one card, and let's just say you're using $15,000 of that. Your utilization is at 60%. That's double than what a bank wants to see. The best thing you can do if you have the ability to make more than the minimum payment or just above it, definitely 100% make more than that minimum payment because it's just going to make a huge difference in your your credit report. It really is. It's like night and day. Even if you were to take all of your revolving debt, unsecured revolving debt, like your credit cards, and let's say you consolidated it all into an unsecured loan where there's set payments over that set period of time. You have that set interest rate, and it's over, I don't know, 48-month term or 60-month term, whatever, for you to pay it off. So now your credit cards are showing the either next to nothing balance or zero balance. Just depends on how much was paid off. But let's just assume that it shows like a next to nothing balance on it on your total of all those credit cards now that you consolidate the debt. If you look at your credit report 1 month later, after the banks have had their chance to report them to the three credit reporting agencies, again, Equifax, Experian, and TransUnion, you're going to see your score shot up because you don't have that revolving debt showing there. The debt is still there, but it has been allocated to a different category. It sounds crazy. The debt is still there, but it's not showing all this revolving debt. Now, if you go back and charge the debt up over again, then okay, well, you're gonna be back in the same boat you were in before. So it's like, it's little things like that where people just don't know, or they just don't understand, or just were never taught. And one thing I always said with American schools, I wish it was a requirement for students to take a finance class that deals with credit, especially that deals with how to manage your accounts before you graduate school, because just too many kids go to school, graduate, they get out into the real world, get into college, open all these credit cards up, ruin their credit before they even got started good. Just it's sad. I've seen it happen many times. I have talked to those students many times, once they get to college, and it's just sad, and banks just target them when they go to college, beginning of their first semester. But that's just, the nature of the beast when it comes to that. So let me go back to the utilization part of it, what we were talking about originally. So I want to say that another thing when you have high utilization on your uh, accounts, so you are making your payments and you're making your payments on time, and you're like, okay, I'm fine. I'm making my payments on time. So, sometimes when you log into your account and pay your bill, the credit card, companies will ask, hey, we need to update our records. They haven't been updated in a while. How much do you make? Well, the only reason why they're asking you how much you make is because they want to make sure that the credit line that they have for you makes sense. Because they're going to take that information and they're going to either do one or three things. Gives you or gives them the ability to increase your credit line, keep it stagnant where it is, or to decrease it and or close it. They will. I can't tell you the countless times where, I've talked to a customer and they call in for a credit line increase. And, it's all these algorithms are on the screen that's letting you know that, this person, before you increase their credit line, the XYZ is going on. So do a financial analysis on them. So you do your quick financial analysis. They made their payments on time. They might have two or three accounts with this particular bank, whichever bank it is. And the next thing you know, you're telling them, sorry, I cannot increase your credit line. As a matter of fact, I do have to reduce the credit line down to your balance plus 2 months of finance charges, just so you don't go over the credit line when it bills. And you're like, what? I called in for a increase. I just want an increase on my credit line. Or you might get the answer, well, I can't give you the increase on the credit line. The amount of debt you have, your usage overall on your credit, not just with us, but looking at your credit reports. Your credit report, your utilization is at 50%, is at 60%. We have to close down the account. They're telling you, we just want you to pay off our debt because right now you are scaring us and you are a high risk. And it's better that we close you down now before, you charge any more of our money up and we take a greater loss should you not be able to pay it back and your account charges off. So that's all the bank is saying to you in a roundabout way. So um it's like I said, it's all these rules to how this industry works when it comes to like credit and credit cards and extending credit out to you and taking the credit away from you and things with collections and so forth. There's just so much to it that just people just they don't know. And it's not anyone's fault, that they don't know because all we've been taught all our lives is that you keep your credit good. You make your payments on time and you're fine and you're not told about anything else that you need to do to maintain impeccable credit. So, these are things that I want to talk about on my channel because, like I said, people have always told me, you just need to like just put it out there and just inform the public, what's going on. You have like just a wealth of knowledge and I mean, I can say I know probably more than enough. What's going on with this industry. So if you have any questions, definitely, drop a comment in. If there's anything you want me to talk about in particular, the topics that I mentioned in the areas that I worked in the industry, we can touch on it if I can. Like I said, if it's something I don't know about, look, I'm not going to like sit there and just talk out the side of my neck. I try to, talk about things that I actually know about. And, I'm not going to be 100% every single time. And if there's times where I need to stand corrected, I will stand corrected. I have no problems doing that. I just want to make sure people get the right information out here so they can make a better informed decision. So definitely, if you like what you heard and you want to know just so much more about, the industry and how things work, whether like, mortgages, credit cards, loans, checking, savings accounts, deposit accounts, CDs, things of that nature, definitely, just, drop it in there. Please hit like and subscribe to my channel and we can keep this for. I'm very happy about doing this. I guess I've been told like countless times, you just need to go out there and just let people know. The public needs to know about this because people just don't know. But other than that, that's pretty much it. And if you have any questions, again, you can drop it in the comments. You guys have a great rest of your day, and it's been awesome talking to you guys. Have a good one.